Welcome to Explain the Charts, where we break down the news and chart data for you to help you make better trading decisions. Today, September 6th, we're taking a look at the SPY ETF, which tracks the S&P 500, and analyzing where it might be headed. The market is currently showing a bit of volatility as investors wait for the August jobs report, which is expected to be released later today. A strong jobs report could signal that the U.S. economy is still strong, which could lead to further interest rate cuts by the Federal Reserve. However, a weak jobs report could indicate that the economy is slowing down, which could lead to less aggressive interest rate cuts or even a pause. These events have a direct impact on the stock market, so understanding the news is crucial for informed trading decisions. Let's switch over to the charts to see what they're telling us about SPY. If we look at the daily chart, we can see that SPY has been in a downward trend for the past few weeks. The price has been struggling to break above the 550 level, which is a major resistance level. There's also a noticeable drop around the 535 level, which could act as a support level. Zooming into the 1-hour chart, we can see that SPY has been trading in a tighter range recently. The price has been bouncing between 550 and 555, with a bit more downward pressure in the past few hours. The 550 level is still acting as resistance, but there are some signs of potential support around the 552 level. It's important to note that these price levels can shift, and we'll need to pay close attention to the price action to see how they develop. Let's look at the 15-minute chart to get a better sense of the short-term trend. We can see that SPY has been trading in a sideways trend for the past hour. The price has been bouncing between 551 and 552, with a few false breakouts in both directions. This suggests that the market is indecisive about where it's going next. Taking a closer look at the 15-minute chart, we can see a pattern emerging. There seems to be a consolidation around the 550.5 level, which could be a sign of potential accumulation. The price action is also showing a few bullish engulfing patterns, which could signal that a breakout to the upside is imminent. However, we need to be cautious, as we also saw a few bearish engulfing patterns around the 552 level, which could indicate a breakdown to the downside. Remember, this is not financial advice, and it's essential to conduct your own research before making any trading decisions. The market can be unpredictable, and even the best technical analysis can be wrong sometimes. Ultimately, the best way to determine if SPY is bullish or bearish is to carefully monitor the price action, watch for key price levels, and pay close attention to the news and events that are affecting the market. To summarize, the key price levels to watch in SPY are: resistance at 550, support at 552, 1-hour chart, and 550.5, 15-minute chart. If SPY breaks above the 550 resistance level, it could signal a bullish breakout, but this would need to be confirmed by sustained price action above this level. On the other hand, if SPY falls below the 552 support level on the 1-hour chart or the 550.5 level on the 15-minute chart, it could signal a bearish breakdown again, requiring confirmation through sustained price action below the level. It's also important to keep an eye on the news and events that could affect the market, such as the August jobs report. A positive jobs report could provide a bullish boost to SPY, especially if it leads to more aggressive interest rate cuts by the Federal Reserve. However, a negative jobs report could push SPY down, as it could signal a weakening economy and discourage the Federal Reserve from cutting rates as much as expected. Ultimately, the best way to make trading decisions is to use a combination of news analysis, chart patterns, and your own judgment to determine if SPY is bullish or bearish.